Okay, hello everybody. Welcome to Korean Atlanta Mentorship. So today's video is a clickbaitish video, and actually the title of the video is true. I don't think Dave Ramsey likes velocity banking at all. He must hate it because every time the topic of a HELOC comes up, he seems to not like it at all. Right? You could take a look at these faces, and it right here. It says home equity line of credit. Dave Ramsey rant get a HELOC to pay off my debt. And if you take a look at his website, where it says HELOC, what is a home equity line of credit, and you scroll down, let me scroll down here. How does paying back a HELOC work? Well, it doesn't work in your favor. That's for sure. That's in the official Ramsey website. So lenders set up HELOC repayment plans so that they can make money, not make it easy for you. Trying to pay back your HELOC in minimum monthly payments, like most people who use credit cards or credit lines, will not fill up your bank account back up quickly. You'll end up paying even more ridiculous interest charges, right? So the reason why I say it's not really clickbait, but it is, the clickbait part is I'm just using Dave Ramsey's face, and but the not clickbait part is like he doesn't like velocity banking. In fact, I think there was a video of George Camel, velocity banking, where he talks about, like, look at it, it says velocity banking part two, and look at his face. Um, why this viral mortgage check is a terrible idea, right? So you could tell that they're always going to be anti HELOC, and I love Dave. I love listening to him, and I like George too. I listen. I actually listen to his show a lot. But if you listen to the Dave Ramsey method, and here I am on his website about like how much I should have in savings, you could see that his advice is to have 3 to 6 months of expenses in a fully funded emergency. So if you have $5,000 expenses, your emergency fund should be about 15 to 30 grand. Now let's take a look here. And I always love to use examples because you see kind of the test of whether a strategy is good or not once you're in that extreme, right? Like if you only have one or two loans, you're in a really good situation, especially if you have good cash flow. But if you have great money and you're stretching that money thin, and $355, how much is Dave Ramsey saying that you gotta have? So let's go check right here. So that's, he says 3 to 6 months of expenses. So let's multiply this number by three and also this number by six. So this is going to be um, B4 times 3, right? Oh, no, sorry, C B4 times 3, okay? And B4, oh, no, I'm actually wrong. It's C B3, I'm sorry. I'm getting mixed up. And then here, B3 times 6. So basically, what Dave Ramsey is saying is that if your expenses are $9,000 a month, you have to save between $28,000 and $57,000 a month, or in your savings account to do well. And good luck with that if your savings is $355 a month. I don't even know, is that even possible? Like, can you save 350? Like, how long is it going to take to turn $355 and put that into a savings account so that this is 3 months, this is 6 months. How long is it going to take you to get 57 grand into savings? That would be insane. But again, that's Dave Ramsey's plan, and he says don't use a HELOC, right? Doesn't like it. Take a look at this. It doesn't work in your favor. That's for sure. Yeah, if you make the minimum payments, which we're not going to do because we're going to do something called velocity banking. And here's the thing. This video is not anti-Dave. I love Dave. You know what I'm saying? That guy's got more money than I don't know if I'll ever make. I heard he has 50 million cash in the bank, be able to buy, he done a ton of real estate. So nothing wrong with what I'm saying, but I'm just saying that if I listen to what his advice is on his website, 3 to 6 months of savings, I don't even know how that's possible. You know what I'm saying? But we're going to do something different, which is we're going to do velocity banking. And a velocity banking requires a HELOC. And I don't think Dave likes those HELOCs, right? Everybody needs a HELOC. And then some people watch these videos like, oh, I'm so pissed because who has a HELOC or who has a $15,000 line of credit laying around, you know? But let's just assume we have a $200,000 line of credit laying around, right? And so, in order to velocity banking, we only need two things: a budget and a line of credit as our main operating account. So we already have a budget, and we assume we make the same money. Instead of going to 3 to 6 months of savings, we're actually going to go in the exact opposite direction with the zero savings. Okay? Zero savings. Now, what we're going to do is just re engineer our finances to do velocity banking, right? We're going to do velocity banking. And what we're going to do is increase our cash flow without making more money, right? So if I just go ahead and move these, we have like 10 credit cards here, and I love using this 10 credit card example because it's like you're at the extreme end, and if you make a lot of money, you know how to manage that cash flow easily. I'm going to move that $167,000 of debt right here, right? 167,000. Okay. And so now, what's the actual strategy? Well, it's paycheck in, expenses out. Now, take a look at this because we moved this $167,000 of credit card debt. These all go to zero, right? These all go to zero. Oh my goodness, how did that happen, right? Look how easy that was. And then what I'm going to do is take the cash flow, which is just the income minus the expenses. So, whoopsie, how did it go from zero? False, I mean, I put the wrong operator, minus C3. Okay, so now we can easily get to that $50,000, $70,000 mark in our cash flow rather than this $300 itty bitty savings and then somehow magically going to 50 to 70,000 from this $300 savings. Maybe it's possible. Maybe I'm just oversimplifying things, or at least maybe I'm not seeing the big picture. I don't know. Maybe Dave sees something that I don't. I don't know. But I'm going to make it easy for myself to pay the debt because it's the actual strategy is paycheck into line of credit, expenses out, and then after every month, the balance goes down by the cash flow with the interest, right? So let's just do this calculation again. So it's I2 plus 1, right? Is the next month's balance is the previous month's balance plus the previous month's interest minus that cash flow of 5701.35, okay? And we're going to take the average daily balance, which is how the interest is calculated, get the average function, multiply it by 10%, and then divide by 12, right? And then get the interest, and all you got to do is just copy and paste these formulas, and then bam, you can see that from copying this, right, we have the interest, we're definitely calculating that. If we scroll all the way down, right, at 34 months, oh my goodness, like we paid off this 167,000 credit card debt and we didn't have to wait for our 3 to 6 months emergency fund from $300 to go to what was it? What 3 times 3 to 6? I gotta do this again. I'm sorry. This is so ridiculous. So let me go ahead and actually paste the values only. So let's go ahead and do this. And I'm gonna multiply this one by 3, right? So by 3, and then I'm going to multiply this one by 6. And it's like, how do you save up 28 grand if you have $355 in savings? And especially 57 grand. This maybe I'm just that stupid, right? See your family's monthly expenses around 5,000. That means you're sitting around an emergency fund of 15 to 30 grand. Good luck saving that in this situation. Or again, maybe I'm really stupid. I don't see the big trick picture, right? But here's a cool thing with velocity banking. Again, paying off that 167,000 of credit card debt was so easy, and we did it in 34 months, right? 34 months. So 34 months, and 167K of debt. Okay, and then we just do this, and now equals 34 divided by 12. That's less than 3 years for $167,000 debt. Amazing. Oh my goodness. All right, well, yeah, so what do you think? Do you think Dave Ramsey is wrong for hating HELOCs and his colleague George Camel hating velocity banking because I don't know, maybe he's saying that it doesn't work for your favor. So again, I'm going to let you decide. I'm not going to say velocity banking is better, right? Because I want you to make your own decision. But what do you think? Right? And I'm totally going to admit that even though the title of the YouTube video is actually true, Dave Ramsey hates velocity banking because he hates HELOCs it's like if A is true and B are true and B and C are true, then A and C, I think that's from like one of those logic classes must be true. Right? So, but the clickbait part of the thumbnail is just using Dave Ramsey's face and posting it on the YouTube thumbnail. Okay, well, this is Korean Land Mentorship. I just wanted to post a quick video for today. If you're interested in joining our group, go ahead and click the Google form link below. Just want to warn you that there's now a paywall to join. So I'm only looking for people who are serious about learning about real estate investing and financial literacy. Other than that, have a great day, and we'll speak next time.